and go back historically. Let's see here. This would be the front month. Where do we get up to? Yeah, we got to 505, the first of 2025, whenever, I think that was maybe on a trade talks with China that have yet to materialize. So I think this was kind of tariff positive, it was before Liberation Day. So I think it was on the hopes that we would get a trade deal with China. And then it just kept kicking the can down the road, but supposed to have a meeting, in May? We'll see if that happens. But just to, hard and fast line, we haven't really been above $5 until first half of 2023. So it's nothing particularly significant about $5 corn, just the fact that we haven't been there in several years.
Well, it's such an interesting crossover on are they all moving averages? Is that what you have up there?
Mm-hmm. Yeah. So if we go back to that chart, is this what we were looking at? So this is the weekly. So I have the 200-day. And then down here, I have what do I have? 50, 100, the 9-day, and the 20-day. So usually I don't know why I have the 9-day and the 20-day. I'll look at those on a daily chart, not on a weekly. On the weeklies, I just want to look at 50, 100, 200-day. And then on the daily chart, the 9 days, I like to look at short-term trends. And then the 20-day is just a default setting. So I feel like if it's default in there, it's default in there for a reason. So a lot of people in the market must be looking at that. So I like to keep it up just to kind of have it as a reference. Wheat has been the big mover though. So May wheat, we're rolling out of the markets trading in the July. We pushed above $7 yesterday. And let's look at, when was the last time we were above 7? So this is the average daily continuation. It will be off July. But we haven't been above 7 since briefly in 2024. I don't remember what was going on then. And then, back to 2023, this was all the Ukraine war and then the long tail of that event risk, kind of the long tail. So we could have some legs to it just from the fact that it's been so compressed for so long and it's finally starting to break out. And then part of that is the fertilizer story. Is there a shortage? Is there going to be a shortage? Is there a shortage here? Is there a shortage in other countries? Lots of moving parts there. Also, let's look at something. This is really interesting. Oh, here we are. If you look at the drought monitor, this is a big reason why we're moving too. So wheat area, there's a way you can slide it and see the changes over time. But Kansas is our biggest wheat growing state. And so earlier in the season, we've had continual drought in the southeast and in Texas in the west. Kansas was kind of safe. And now we've got, 2/3 of the state in at least moderate to severe drought. We've got, Nebraska is a big corn growing state. It's an extreme drought. Eastern Colorado grows corn, extreme drought, severe drought. Texas Panhandle, so there's it's easier to look at and identify what is not in drought than what is in drought. So we've got some places we're getting into corn planting. Some places of the Midwest are too wet. Maybe, I don't know, have y'all been getting rain, Danny? Are y'all pretty wet? Or have you noticed?
Yeah, everything here is green and lush. And I feel like it's way earlier than normal.
Yeah. So some places are complaining about being too wet, not being able to get into the field to get planted. But So Eastern Corn Belt looks good. You can just see by the map. Western Corn Belt dry, Southeast extremely dry. And then, which is a big reason why cotton has moved too. So this is a weekly chart. And for whatever reason on my Trade Navigator, my cotton quotes are just end of day. So this is just yesterday, only has yesterday's most recent price. But cotton has been sideways for 2 to 3 years. If we zoom out, just dead sideways, just like grains were, but even more depressed and even more sideways. Finally starting to break out. Cotton has been higher. So it's at the upper end of its recent range, but historically, if you zoom out, it's got some room to run. Does it get above $1? I don't know. It's got to get above 80 first. But cotton is really grown in the Southeast. It's grown in Lubbock, in West Texas, and it's grown in South Texas. So I think I've deleted the email. I get an email once a week, and it's like 95% of the cotton growing area is in some form of drought. And I think it would be like 199%. So that would really affect new crop. So you've got old crop cotton, which could be affected by oil prices going up, demand, export demand, potentially demand from China if something materializes there, which hopefully it does. I don't know. And then you've got probably lower acres in Brazil because prices have been so, they have an opposite growing season. Our prices have been so low that they've probably pared back some acres just for economic reasons. And then you've got the drought. So the drought would affect lower acres globally, and then significant drought that would affect new crop. So that would be December and March cotton. Watch. And then soybeans are less exciting just because they're still sideways. So July soybeans fairly sideways. New crop beans creeping on up there. We made a new high for the move, but just looking at this chart, it's been much more stable. And a lot of that is with oil spiking up, biofuel demand has been increasing worldwide. Like I just read this morning that Mexico wants to increase its ethanol blend. Everybody wants to increase their biofuels because it's a cheaper alternative to high crude. It's not as effective economically whenever crude oil is low. But whenever it's high, you want to blend anything you can. So that's just a trend, and it probably will continue to stay. Like, I just think if oil goes back down, which it will at some point, nobody knows if that's 2 weeks from now or 2 years from now, but oil will go back down. But I bet this trend change to higher blends of ethanol and biofuels probably stays. Yeah, it'll be months at least. I mean, plus that's just the nearby shock to supply, and then how much infrastructure has been destroyed that keeps that supply lower going forward. You have to think. You have any questions at the moment? Yeah, buying out of the call grain options. Do want to state, since I didn't state it initially, that this is just my opinion. This is for information purposes only, and this is not a solicitation. And trading risk, trading futures and options has risk, potential risk of loss. So I think we want to cover all those before we get any further in. Seasonality to cotton, let me take a look. So let's look at, I've got this website database that we do look at seasonal patterns. So let's look at cotton. So let's look at these. Yeah, so seasonally, it kind of, the market, you call it buying acres. So the market's going to rally to make sure that we get the acres, because in these regions. You know, you can grow cotton, you can grow, we don't grow soybeans in West Texas. We would grow more corn or sorghum. I don't know about sorghum in the Southeast, but they can switch to corn or soybeans. So I think sometimes it's a conversation, economic conversation between soybeans and down here in the Gulf. I know they sub what that is season algo, and it's just something that I subscribe to, and it's got tons of archives of seasonal, historical, all sorts of good stuff. It's nice. Put it in here, and it's affordable. So I forgot where I was going with this. Where was it? Oh, we're looking at seasonality. So it wants to try to buy acres to make sure that you can switch right before planting and decide to switch and go to soybeans. So seasonal pattern is that it's going to buy acres, and then once we get confirmation that it's in the ground, emerged, there is going to be a crop, well, then it's going to take risk out of the market. So it's going to price in risk until we know with a comfortable degree of certainty that we have the acres planted and they're up and emerged and growing. Then it's going to take that risk out. So that's kind of why it follows that seasonal pattern. Let's look at July. See if there's much. Yeah, so July kind of following that seasonal pattern. Sells off into expiration. And it's kind of fun too to look at. Let's see. So the seasonal pattern, and then it'll show you stacked. So this is a noisy chart, but the past 20 years stacked on top of each other, and you can kind of see, you know, where have we been before? We have the upper end of the average, lower end of the average. So that's kind of fun too. Cattle had a big move this week. If we're looking at, let's go to June. June's the front month for live cattle. So past 5 days, huge. We had a pull, so we made new contract highs, sold off, corrected, had some profit taking, and then exploded out of that much higher. And so we're talking like all-time highs. Each time we make a new contract high, we're making a new all-time high in the cattle right now. Feeders, kind of same thing. Didn't make a new high on this move, but did have an, went down here to the 50-day, held support. So tested it, broke below it, but reversed back and closed higher, and then just exploded out of that. And if we look at the seasonal pattern for that, let's see what that looks like. So seasonal pattern for June specifically is to rally into expiration. But then if we look at kind of where we are in history, we're just miles above. This green line would have been last year. So this time last year we were at $2. Now we're at above 250. June's at 254. So just wild to see where we are relative to where we've been for the past 20 years. And even you could look at the past 5 years. Let's see. So, you know, look at some options.
Sure.
Okay. Let's change my screen. Let's see if it kicks me out. Let's see, how do I change this?
Hey, Laura, Stu's asking about if you could just summarize Danny's question because he came in late.
Okay. What was Danny's question? Buying out of the grain, out of the money calls on a dry summer. Let's switch over to my options screen if I can. See, I don't need to do this. What are we doing here?
Hi, Danny. Oh, we lost her. I think we still have that issue. Did you pop out or did you freeze? Can't hear you, Laura. Can you guys hear Lauren? Oh, she's coming back.
Iran's deputy parliament speaker says America must accept the Islamic Republicans' demands. Otherwise, the Iranian nation will stand against the enemy.
Okay, can you hear me now?
Yeah,
Okay.
for sure. Nice.
Okay, so corn has monthly options go off of the contract, individual contract, but then you can also buy short dated options, which lots of different commodities have this. But I like it because you can buy December options, new crop options, but you can pick what month you want it to expire in. So you're paying for potentially less time value, and you're maybe capturing some of that seasonality. So I like to do that for different strategies. So right now we have, if we buy just a straight June call, that's going to be against the July contract. Or we can buy a short dated June call that is against the December contract. So that's what I like to do. And then you can pick your expiration. So if we go off that seasonal pattern, let's bring that back up. And probably want to be owning new crop. And if it's a drought, you know, if for fertilizer drought, any sort of concern that way that might make us want to rally, you'd want to be in new crop because that's a new crop concern. So we want to be based off the December underlying future. That seasonal pattern is that we typically peak in June. You could go back, it's going to be all over the place. 2025, we peaked in Feb, 2024, May, 2023 was June, 2022 was May. We're still up in June. 21 was May. So, you know, it's not always going to be June. That's just the seasonal pattern. 2019, pretty straight seasonal. 2020 was the opposite of everything seasonal. 2018, May, 2017, July. But anyway, so if we keep that in mind, if these expire May 22nd, so if I'm going to spend money on options, I probably want to go out and at least be able to have something that expires the end of June or maybe further. Full dated December options are going to expire at the end of November. So November 20th. So if we go out, so these expire at the end of June, a 520 call would be 9 cents. Bids 8 3/4, offers 9 3/8. Probably could get it bought at 9 1/8. So that's going to be 9. Where's my calculator at? Just to walk through the math, but You say 9.5 cents on a 5,000 bushel contract. That's $4.75 per contract. So let's see. This is the what? 520. If we buy the full dated 520 call, it's going to cost 26. So there's that difference in time value. If you want to own it for 205 days, it's going to cost you an extra 15 cents. So that's why I like the flexibility of the short dated options in congruence with that seasonal
Apple
window.
are planning a Siri camera mode.
If
and
you just want to go
upgraded
like way out of the
visual
money, buy
AI
something cheap.
in iOS 27.
Yeah, 550 call wouldn't be
They're
bad.
slated to announce
Just
the
to have some
updates at
ownership.
their
Full dated
WWDC
December
event
is going
in
to be
June.
18 cents. So those are kind of some ideas, something to think about. And then if we're looking at maybe some strategies, when things are cheap, you want to be long vol. When things are expensive, you want to be short vol. So like on those, if we go out to full dated December, I probably want to look at like a call spread. Call spread is saying that we don't, a call is going to make money when the market goes up. So if you buy a call, you're going to have unlimited upside, and that cost is going to be the premium cost, what you spent for it. So you don't get that back. So you've got that threshold. If I buy a call for 9 cents, it's got to go up at least more than 9 cents for me to pay for that option. I have to think that it's going to go up more than that. If we do a call spread, that's saying I want to make money, but I don't necessarily need unlimited upside because I don't think it's going to infinity, but I want to capture this range and potentially cheapen it up a little bit. So I would look at, if we're buying some out of the money calls, maybe like a 550 to 650 call spread. Let's see if that's worth it. So now that's 12 cents, and you've got, how many days? You've got 205 days. It says it right here, days till expiration.
Does everybody understand the graph that she's showing?
So the graph we're looking at is the green line is profit at expiration. So I have this cost, this 12-cent cost that I always have a cost. That's the cost of using options. And then the colored lines are going to be your step lines of days till expiration. So they have 205 days left. So I'm going to come in here and, let's theoretically, when they have 120 days left, 60 days left, and 30 days left. So, okay. So I have upside from 550 to 650. Above 650, I don't participate in the market up there. I'm maxed out on what I could potentially make. But if the market goes from 550 to 650 and I still have 120 days of expiration left, well, I'm making money on the long call, but I'm losing money on the short call. So I have to pay to buy that short call back. So I'm going to not, if the market goes up $1, I'm not going to make $1 on that strategy because I still have to pay to get out of it. So it's going to drag. This red line is like the theoretical value. If we're at $5, if we go to 650 by tomorrow, this is saying like with today's time value and all the pricing components. And then as that time value goes down, you get closer to maxing it out, but you don't fully max it out until expiration. So some strategies, you want to try to get those wings right at where timing wise is going to be the hardest thing and hardest part to manage on options. So you kind of want to get those where you think we might be, when you think we might be there. And then you can see your deltas. So deltas are going to be, if your deltas are positive, that means you're long. If your deltas are negative, that means you're short. So you're long from 550 up to 650, you're essentially long one contract. And then above 650, you're essentially flat, not flat. Do you have any questions on that before we change subjects? So then you could get, let's say we do it with short dated. We want to go out at least to the July, just because we don't want to, let's do 520 to $6. See what that looks like. So won't let me even put it in because I'm on sim on the demo, but settled at 7 5/8. So let's assume these corn's up a penny, so it's not going to be wildly different than where it was. But what you don't want is for the market to go up. You've got these strategies on, these call strategies on, the market goes up. You want to take profit on that, but then you're not able to because you've got so much time value in this short call that you've got to buy back. So it underperforms. And then it, say it follows that seasonal pattern and sells back off. And then you were right, but you ended up not making money. A lot of people get frustrated with options because it's like, hey, I bought this call. Let's even say, today you bought a $5 call. So that's got volatility and time value priced into it. And we're buying calls. Let's say we're buying calls whenever the market's really moving. So that volatility is going to be high. And you're buying it. And then volatility kind of slows down. Even if the price keeps going up, but volatility slows down and it goes up a lot slower. Time value comes down. Crude's probably the perfect example of price was going crazy, volatility was going crazy, and I bet you could go back and look at some calls that were bought whenever the market was going crazy with the war, and I bet you could see where you would have bought it in March and the market's higher now and you're still losing money. So
Israel's channel 12
want to
reporting that
use some of these strategies where
Netanyahu
you
will
can
speak with
be wrong
Trump by phone
and
in the
still
coming
make money
hour.
or be right and not lose money. We can also like doing some ratios, like a 1/2.
Wait, what did you just say? You can be wrong and make money, or be right and not waste money. Is that what you just said?
You want to be, the best option strategies are when you're wrong, but you still make money. So wrong on like price action.
Yep.
Or right. And it's frustrating when you're right, but you lost money because your option strategy was wrong. Or you were just long vol and then vol comes down and doesn't really matter what flat price does.
Yeah.
So, we could do something cheaper. So we're buying one, instead of buying one and selling one, we're buying one and selling two, a 1/2. So ratio, let's do, and these have 58 days left. So let's say, 55 days till expiration, 30 days and 10 days. And so it's going to have a huge drag. It's going to be to $6 and you're going to be right. And you have a huge drag on your P&L. I mean, we're probably not going from $5 to $6 super fast. We might, but you're not going to max that out till we get sub 30 days till expiration and even closer to expiration than that. And then if you look at your delta on this particular strategy, you're going to be short because you've bought one and you sold two. So now you're essentially got that extra short. So you're going to be short above 6. So you're going to be, market's right, and it's right to where you could potentially max it out. And now you're on margin call because your delta has gone up. You're essentially short as the market's gone up. So you're having to margin that position, even though theoretically it should be working. And it is working. It's just not working until you get to expiration. So questions on that? That's probably a good place to stop for today, but questions. Do the Ags have 0 DTE? I mean, no, not really. They do have weekly options. I don't know what the symbol is. I don't trade that a lot. And short dated off at each month. So monthly options, no, 0 DTE. I just think it'd be too thin. I mean, you can see how thin these are. Let's see. Let's look at like a short dated at the money. That's probably, yeah. So thin and wide.
Short dated is hedged against the quarterly future contract. Is that what you said?
The individual futures contract. Yeah. Yeah. So you could pick your month and then, but I don't know. I'd have to go look. Like, you know, you can do a July option short dated to June. I'm not sure you could do September. Like you could do August short dated to September, but I'm not sure you could do like September underlying future short dated to June. Maybe you can. I just never done it. There's really no reason to.
Could you do sub Ds?
You could do Ds. Yeah. Yeah. Okay. Yeah, I don't think I've missed anything specifically about this.
No, this is awesome. Thank you.
So, okay, we'll stop there. We'll move over, let you take over, talk about mindset. One thing, kind of general mindset topic that's relevant for this week is that we've started wheat harvest. And so when we get in harvest, it just kind of throws off the flow of our normal routine, and just things are different for us as a family, and you have different schedules. Like Jake left this morning at like 5:30. So we've got different daycare schedules. We've just got all the things. So I know whenever we get into harvest, I'm going to trade less or not trade at all, just because my energy and my mindset is going to be off.
So it actually took you a while to figure that out. It took you a couple harvests, right?
It took me a couple years. Yeah. And you helped me find that and identify that. So now we harvest in the spring is not as long as harvest in the fall. And so now I know harvest in the fall, it's like, that's a good time to maybe plan a good trip to go visit my aunt or something fairly small, but it's a good time to go and take things off my plate rather than try to really push at work or in the markets, because it's a good time to just say, okay, let's take a break. Let's go somewhere.
And really the premise is just being aware of the season in your life, period. And metaphorically speaking, for sure. But
yeah, we have that metaphoric connection because it's literal seasons, but it's different. It applies to anything.
Yeah, I mean, I can speak certainly on mindset in that way because of everything that's going on right now. Just super busy. And yesterday, like a different type of myself showed up in my trading, where I literally said to myself, okay, if you're going to trade like this today, just keep it small. I mean, literally, it was like me trading around my hunch of positive and negative, because I was so tired that I couldn't even break myself away from my desk because of everything that's been going on. I just wanted to sit at my desk and just trade. And this is a behavior that I'm so used to. I mean, back of my head is so used to from old days where you just never left your computer in your office. I mean, when I was at the CME trading, but it's not a great habit. But it wasn't a boredom trading. It just was, I'm so tired. And if I can contain it and just work around this, then I'll just do it. It's not a great habit. I don't condone it, but certainly that's what I needed at that time and place. Mm-hmm. So, but that is not the side of mindset I wanted to talk about. The side of mindset I wanted to talk about was, but it'll relate as I carry it over. I have another business that I have and a business partner who is so abundant in his mindset. And I know I carry that as well in my other realms of life. And it's just been so difficult to carry that over. Carry that over in trading because of the realized action of lost money. So let me run through this. I'm going to share my screen. I created a spreadsheet for you guys again. I'm always going to create some sort of action item for you guys if you want to use it. Certainly, it's to benefit you. So depending on where you are at in your process of awareness of your own thoughts, actions, and behavior, or thoughts, words, and behaviors, you'll see. Okay, can you guys see this?
Yeah.
All right, so I created this so that you guys could see which part. Yeah, but which part? Okay, so this business partner of mine, we crossed paths. He's very new to real estate, brand new. I've been in it almost 8 years, so I have experience to share with him. And each task he accomplishes, we celebrate. Now, this is very different than how I operate. I've lost track of celebrating small wins in trading. In the rest of my life, I do it for everything else and how I would talk to others. I would name it, but for myself, it's been a very difficult thing to get over because for many reasons, but it's hard. I think it's really challenging in trading because not only of the realized cost loss, but also it's very outcome based. Whether the outcome is following your plan or your P&L, there's an outcome associated with it. So if you can take a step back and really appreciate what is going on while you're trading or even before you're trading, that you have this opportunity to do this. Most people don't even understand what's going on. That I'm sure that there are people in your life who don't even comprehend, won't even want to comprehend what it is and why you look at a screen with the numbers going up and down. Or you choose to find joy in taking a look at the fibs throughout the day. And so here we are in this spreadsheet. It's called a T-chart. On the left side is your abundant mindset and your right side is your lack mindset. And so what breaks it down is I put your thoughts, your behaviors, and your words. It should actually be thoughts, words, behaviors. And I'll switch that around when we're finished here. But so that you can catch yourself in the moment, whether it's an abundant thought, because you want to celebrate that side of you. And the more abundant thoughts that come and the more abundant behaviors and the more abundant words that come out of your mouth, the easier it'll be. Like everything else, practice, 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 practice. But it's to catch really to obviously exploit those lack thoughts, the lack behaviors, the lack words that come out of your mouth. So like the impulse trading, that's a lack behavior. Either it's FOMO, your fear of missing out, or you're sabotaging. So what would be the opposite? So let's say lack behavior, my C cluster trades, which are my impulse trades. So for me, if my C cluster trades, which are my impulse trades, which are the trades where I think that the move is going to expand, I've already taken a massive profit, and for me, a massive profit, right? That's my terms, but and relative to me, but and I want to get back in because I've closed it out. So I think it's going to expand further. When it doesn't, and it's that like whipsaw reaction of the market that we've seen and we know so well, and then I give back half of my profit. And then the lack spiral starts. The thoughts, more actions, and more nasty words come out of my mouth, right? And I'm over-exaggerating it to a certain degree and under exaggerating to a certain degree, it just depends. But to the left side, then I would rewrite that. Now, what would be the abundant mindset? Okay, let's say it's okay. I took profit. I will pause. Or you can even say, the abundant mindset, I am aware of my cluster trades, and we'll stop here. So it's to catch you. So even to the point of not so much even trading related, but also in your life. Like I said, how are you guys? And Brad said pretty well for a rainy day. That's an abundant mindset. He could have just said, it's raining. It sucks, right? And so actually he said pretty well for a rainy day. You guys feeling me?
Al Arabi,
Yes, this is for informational purposes only. It's not trading recommendations, and there is risk of loss when trading and future options. I'm not a doctor. These are exercises that I have gone through over the decades that I am actually willing and wanting to share to you guys, so that maybe if you're going through a hard time, you'll hit an aha moment and take this nugget with you and use it to the best of your ability. And sometimes you want to use it. Let's say you don't find value in it today, and maybe 3 years from now, you really are going through some sort of cycle and you're like, what was that Danny was showing us? Oh yeah, that T-chart of abundance versus lack, to be more aware of my thoughts and my actions and my words. So, you know, it's just like those things you put in your pocket and then you pull them out on a, no, I guess, pun intended, rainy day.
I think it would be great. Or I mean, first thing that comes to mind on lack is like, you have a good trade, you want it to be twice as much. Say you're up $500, you're like, $500, that's not anything. That's not enough, whatever it is. Could be 5,000.
So, and you're thinking it, that's not enough.
That's not enough. That doesn't even cover what I spent yesterday on new tires, you know, or whatever.
Yeah. And so $500 profit.
Heck yeah, this is easy. Now let me go back to work.
Oh, how about that? What if it came to you in one trade, right?
Mm-hmm.
An easy one lot trade for $500.
Yeah.
Is awesome. I mean, like this is the environment that we choose to participate in. So it's best to be as aware as possible. And like I said, I knew my behavior was off yesterday. I gave myself that opportunity to be off because I knew I wasn't dangerous for myself. I knew what I was doing. I wasn't happy with what I was doing, but at the same time, I was just like, this is where you are, just keep yourself safe. And for that matter, you know, if we're in the lack of all time, continual periods of time where we need to make more, we haven't made enough, it's just rocking our nervous systems. And really, if you look around you, I'm sure you're super abundant in your office, or you have an office that you can drive to that's not in your home, right?
Yeah.
I mean, that's abundance, right?
Yeah.
You can look outside, and like I said, it's so lush out here. The colors are so fascinating. I can't even believe my eyes. It's an abundant mindset. I know also, I said to my husband the other day, and I was like, oh, I'm going back in my hole. And he's like, your hole? It's like the most beautiful office with a beautiful view. I'm like, this is true. Reframe. So, yes, it's to break these patterns of a negative cycle, which is very easy to do when you're trading and your trades are not going the way you want them to go, or you're following your plan, even positively. You're following your plan, you're aware, and the market is just not there. If you're a momentum trader, the momentum's not there. It's a range day. If you're not a range trader, it's tough to trade those types of days. And so, this is to keep you in a state of being super aware. So let's see. Somebody said, I regularly do meditations and breathing in an attempt to get out of the ego and beta waves, then preferably into theta or gamma brain waves. Having a chat with hosts, 100%. Agreed. And if you guys would want me to, I can lead meditations. If that's something you guys want me to do, I can absolutely guide you through visualizations. I mean, I've been teaching that stuff for longer than I can remember. Let's see, is it fair to say, okay, to break my pattern, I often say what's bugging me and then adding, but at least I'm not on fire as well. It's a goofy and it loosens things up for sure. That's so good. That's great. I love that. Is it fair to say one's identity determines one's abundance or lack thereof? So identity meaning what? So I think, the lack comes from a sense of survival consciousness, and that can stem from your parents, how you grew up, your environment, to which you live in. So perhaps that's what you mean of identity. But also, I'm a true believer that, it could be ancestral stuff that you're carrying with you through your DNA. And so, these are, if you want to get to that side of things, these are cords that are, wonderful to work on. It's called shadow work. You can cut the cords, and there's journaling that you can do, meditations that you can do, guided, past life regression stuff that you can do with a certified practitioner, so on and so forth. So you agree that you can't outperform your self-image. It's tough. It's tough to do. I mean, and I think, like I've said before, it is, I don't know what comes first, the self-actualization which leads you to trading, or trading leads you to the self-actualization. But either way, those who trade and those who hang in here are, in the arena, so to speak, are craving it either way.
I think
Yeah.
something on abundance is that there's a,
LME
have you ever read any books by
aluminium
Scott Adams?
closes
Do you know who that
$50
is?
lower at
He was the Dilbert author.
$3,488 a
And
ton.
yeah, he's the author of
Copper
Dilbert, and he
closes
wrote a book.
$32
He
lower
wrote several
at
books after kind of
$13,004
the
a ton.
Dilbert career. I think is his way of giving back. And something that there's one book, I'll share it in here. I'll have to find it. I have to remember it. I'll go back and look it up in just a second. But he talks about, like, as far as abundance goes, there's probably a psychological, the science behind it, but just in general, we look forward to things more than we like actually having it. Like after he already made his money, he was a lot less happy than he was when he was like building it. And so I think like the way that correlates back to me in trading is feeling, yes, I didn't participate in the move, but I did identify it. And I know that there's going to be more moves in the future with that setup or with, XYZ. And so my upside in the future is not capped just because I didn't participate in the market today.
Absolutely.
And that the future opportunity remains there for me is more abundant than I missed it. And I'm never going to make a move like this again.
Yeah. I mean, that just dawned on me, you saying that, because I remember when that mentality wasn't there. Right. Mm-hmm. And yeah. So, but I mean, and for me, I can remember, I mean, there's nothing different about how the NASDAQ trades today versus how the minis traded when I was trading in 99. And so nothing's changed. Mm-hmm. And there's 27 years in between. And so to your point, Laura, it's precise. I mean, it's just so on spot.
It's amazing how rich you got being partly right part of the time. And then I laugh, my 3-year-old, she likes to say, with the passy in her mouth, she's like, I want the whole thing. You give her like a piece of candy or a bag of chips or something, you give her like a handful of chips. She's like, I want the whole thing. I want the whole thing. She always wants the whole thing, but she's got her passy in her mouth. So it comes out as like, she can't say TH. It's like, I want the whole hang. And so then I'm like, really? You wanted the whole thing? You think you need the whole, like, you just need your handful of chips. You don't need the whole thing. Now more chips after you eat that.
Oh my gosh. I feel she's my spirit animal.
Oh, yeah, she is.
Yeah. Oh yeah, abundance mindset run amok. That's hilarious. I understand one's belief are self-made for various reasons. Decades ago, Van Tharp mentioned if you cannot put something in a wherever, it does not exist in reality. So I deduce, since I can't put my beliefs in a wherever, all my beliefs do not exist. Yeah, I mean, I can go on about that comment for sure. I mean, I don't know. The screens, are they even real? I mean, they're only screens because we've been told they're screens. I mean, it's like, it's everything else in our life. You know, a chair is a chair because we've been told it's a chair. Just if it was something else, then we'd call it something else. I agree with you 100%. It's a scary, scary, scary place. But I can't go there because I can't. But anyway, so this sheet is here for you guys. It's to help you become more aware of your thoughts, your words, and your actions. And again, use it, don't use it, use it today, use it years from now, put it on your desktop, at least download one copy so you have it. Yeah, right. But if you have any questions, please ask. And if you want me to do some guided meditations, certainly after each session or, you know, towards the end of each session, I can do so too. Work on visualization, we can do that. And that's all I got.
Yeah, I was just looking for the link to the abundance. So I'll just put the link to your website so we can go find it.
Yeah, thanks. Yeah, so everything's free, guys. This is all free. And use it to your best ability or not.
All right.
Awesome.
Thank you.
Thanks, guys. Have a great one. Trade easy this afternoon if you are trading through Fed. Thank you. How do I get out of here?
Interestingly enough, I mean, I think the crude oil is big. No audio. Okay. How do we do that? Okay.
In just under an hour, we'll have the FOMC rate decision. Ahead of that, we're about to switch over
Marlon, you
to
get
our
me
London
going. I'm
desk.
like, oh, geez,
My
what'd I
website,
do?
Flipping Service.
Hey, Rev, what's going on? Good to see you. Oh, no, you're
Brent
part of
crude
the crew,
rises
my
above
man.
$119.50
turn
a
up
barrel,
my
which is the
volume a
highest
little.
since June 2022.
Player refreshing. Player refreshing.
So, I've been kind of expecting this thing with the Iranians,
Player
with
refresh.
the way the negotiations were happening. Can you throw up a crude chart?
Yeah, if you just give me a second to sort of find one that I can use here. I've got a whole lack of screens, so
Yeah.
Good morning, good afternoon, good evening, and I'll be here.
Put the right
How many screens do you have?
Interest rate decision this afternoon or evening.
I have 285-inch screens.
Oh, geez.
So, yeah, so it's a bit much, but the life of a crude trader, I guess.
Yeah, you got to kind of center things when you got that, right?
Yeah, well, yeah, that's right. By the way, I think Danny and Lauren are an awesome addition to the group.
Yeah, absolutely.
Oh, man, they are just smart as whips and also just so easy to understand. I mean,
yeah.
So thanks for I get a lot out of them. I'm sure everybody else does too.
Well, I think that they make a very, very good team, right?
Yeah.
And Danny's got a floor trading background, and her dad ran a brokerage firm and traded in the S&P pit. And Lauren, I mean, she's the real deal.
Yeah, there's no question. I mean, you can see it right away. I mean, that's one of the things that I think experience gives you is the ability to identify, the real thing from the knockoff quick. All right, I'm just trying to share a crude chart here. Sorry, Danny, it's taking me more than I thought.
That's all right.
Is there anything you want to ask me while I'm doing that?
Seeing lots of headlines coming across.
Is there anything you want to ask me while I'm?
Well, I mean, crude's basically been up the last couple of days, hasn't it? I mean, was this pretty much expected? I mean, I think it was.
Yeah, we've been talking about this for a couple of months now, right? Like in the room, and when there was that big options flush, a week ago Friday, and oil got into the 78s, it was like, Santa Claus pulled up his sleigh with a top fuel dragster pulling it,
Yeah.
And that was pile in time. I mean, and today in the inventory reports, we saw, the continuation from last week, but it was a confirmation that we're going to start seeing some honking inventory draws. Like they're massive. So there was that lag time between all the boats leaving the Persian Gulf and, and going all over the world. They've all arrived, they've all unloaded, and now we're drawing just massive amounts of crude. And that's not going to stop until, oh, sorry, buddy, accidentally just stepped on my dog, but he's okay. Is that, we're going to, those draws aren't going to stop until months after the end of this. It's going to end up being a story, I think. And again, don't trade off of what I'm saying, but these are just the way I see it, is that there is going to be a long lag time after everything is all kumbaya in the Middle East before the boats go there. It takes a month to go there. They all can't load at the same time. And then they've got to go, go back out into the world, and they can't all unload at the same time. So it's going to take a long time. Lauren made a really important point just before in their segment before that, you know, this is a months long thing after we end up resolving anything. And if anything's evident, it's not close to getting resolved. In fact, it's probably going to get a lot worse before it gets better. And I want to be clear, like, I'm not happy about it. You know, you just want to pick which side of the market you want to be on while that's happening. And and the point that Lauren made is that it's not that they just turn this stuff off. It's been bombed out, like a lot of it has. And we also don't know whether there's, you know, damage done to the reservoirs and the wells. I mean, you don't just restart production when you shut it in. Sometimes it comes back fine. More often than not, it doesn't. So, you know, so it's going to go from like we were talking about the last couple of months here of when are we going to start seeing an impact, and are we ever going to start seeing impact? Well, that collision course that we've been on is now at that point of impact, and then it's going to probably go to a situation of, you know, when are we going to start seeing inventory builds? Because it's not just the demand, it's also the SPRs. Now everybody's pretty rattled, and they now know how serious it is to have your SPR topped up. And so you're going to have extra demand from governments topping up their SPRs.
Well, I think I just looked. Crude's been up 7 out of the last 8 days.
Yeah, and it's in a parabolic rise right now, and the volume hasn't really kicked in yet. You know, like the volume is still relatively low. Now, sure, there's contract roll stuff that's always happening, but one thing I wanted to mention is that, you know, I've been joking internally with, you know, you and everyone else in the group that, you know, Operation Epic Fury should be renamed Operation Epic Jawbone, because they keep trying to talk the price of crude down. The problem is that all they're doing is temporary talking down the front of the curve. The back of the curve hasn't gone up the way it needs to in order for producers to start ramping up production. That's what we need is the back of the curve to start rising, which it's starting to. But the irony is that what they really need to dampen this supply shock is for drilling to happen. And they're not going to do that at $70, and they're not going to do that if they think it's, you know, hokey pokey. 1 minute they're in and 1 minute they're out, and 1 minute the market's shaking all about. Like, they're not. They need stability, and they need to reliably do this. Like, you can't just run a CapEx program based on, you know, one tweet may completely screw up the whole market. So, so that's, you know, like it's going to get very interesting here. I was listening to Lauren and Danny before about, you know, how you know, your dream is to have an office that's not in your house. I've come full circle where it was, I loved working at home, then I loved having my own office. Now I like working at home again. And I think that much like COVID, the difference between the supply demand, like the imbalance between supply demand, is the inverse of COVID. So we're going to need basically COVID levels of demand destruction to balance out the market. And it wouldn't surprise me if you start seeing a huge return to work from home and that kind of thing. You know, and that won't do it on its own, but I mean, that's kind of where it's headed. And I think we're in the beginning of that price discovery that we've been talking about, where it's just going to have to spiral up until no bullish news can rally it any higher.
You know what I really thought was interesting was the UAE talking about leaving OPEC. Yeah, and you know, that puts a big stopper on. You know, I wrote about this in the opening print. BRICS.
Yep.
BRICS.
That was a great opening print this morning, by the way. That perfect timing.
Yeah, thanks. You know, Bill and Jason, Bill the grain trader. He put me in a lottery spread. I think you were back doing kind of something back then too about, you know, I don't know the exact trade. I haven't looked at it, but
yeah, it was a 215, 245 call spread.
yeah, I've got that on right now. And,
And I mean, that was my shoot the moon spread, but all of a sudden it's starting to look like a base case trade now.
You think so?
Well, the simple truth is that energy prices aren't that high. Believe it or not, they're just only high compared to how they were 6 months ago.
Yeah.
But between 2010 and 2014, I mean, they were routinely above $100 a barrel, and we're barely above that now. And inflation adjusted, that's about 140, 150 a barrel. And we were like that for 4 years. And 147 a barrel when it peaked in summer of 2008 is 225 today. So it's not like we haven't seen this before. I think 120 to 140 is where we really start seeing people squawking. But it's not, and that's not to say that it's okay now. It's just that we've been very lulled into thinking lower for longer. That was the big expression, and now all of a sudden it's like we said this before, right? It ain't the train that you see coming that hits you.
Yeah.
And nobody saw this one coming. Will Canadian oil benefit from all this? Yeah, absolutely, Beatty. Like it already has. I mean, just look at the output. A real simple trade, in fact, because Manny's always hustling me for actual trades. Is Canadian heavy oil producers I always find are great leading indicators for the general price of crude. They tend to front run the price of crude. And so if you take a look at what they've done, I mean, there's a pretty good indicator where the price of crude's going. The other thing as well is supply stability.
I knew FedEx some 1047 million of its
Canada, despite what your administration says, is a pretty reliable partner. We have a stable political system. We have a stable legal system. Canadians still love Americans. We're a little confused by the administration, but
no, I had a guy from Canada here yesterday, and he said the similar thing. But I think it's natural that people are suspicious of the way things are going. And I think the United States, the people of the United States, not necessarily Trump, are very fond of the Canadians. We've been neighbors and partners and part of NATO. And I don't want to get into Trump, but I don't know. Something tells me, things aren't right there. But then again, like I wrote in the opening print, it looks like there is a methodology to his madness, but it's like I told the guy that was here yesterday, kind of in the delivery, the push in your face kind of stuff that people don't like, I mean, and I get it, it's true.
Yeah. And it's true. I mean, and thanks, Beatty. And, I mean, Canadians gave the American hockey team the gold medal at the Olympics. We're great partners. So I know a few guys are going to pile on me for that one. But anyhow, yeah. So like Canadian oil, the U.S. is totally dependent on Canadian oil. The U.S. produces about 13.5 million barrels a day of oil and consumes nearly 21. And not only that, I was saying this on Manny's show earlier today, is that oil isn't oil. There's different grades of it. The oil you put in your lawnmower is different than the oil you put in a Peterbilt. And, so crude oil is vastly different API grades and weights. And the U.S. produces mostly intermediate light sweet oil, whereas and you can't economically refine that into diesel and jet fuel and asphalt and things like that. So you need to get heavy oil, the more blacker oil, from somewhere else. And Canada and Venezuela are the two biggest. Well, Canada's the third largest, third or fourth, depending on who you believe, largest reserves in the world. Venezuela says they're the largest, but that was something that they just declared one day. Nobody's actually proven it. And not to mention they have the political instability there. I mean, ConocoPhillips was in there and you know, spent, I believe, $20 billion on infrastructure until one day in 2007, Chavez decided he liked all that infrastructure, gave him all 24 hours to leave the country, and said, now I own all this. And so, you know, you don't need partners like that, and you don't want to invest that kind of money if you're just going to get told to take a hike. Shareholders will crucify you for it. So so you, like, you know, all of a sudden stable partners have an awful lot more currency than the dollars that they represent underneath them.
Now, do you think is there going to be any political ramifications? I know that Putin was talking about being a supporter of Iran and China. I mean, so far they've done nothing. Have they done anything?
Well, the thing is with crude is that, no, to answer your question, but what we don't know is what's going on under the surface. And, you know, I'm probably going to refer back to what Danny and Lauren said a bunch today, because it was like I was practically standing on my chair like, are you freaking guys listening to what these two are saying? Like, this is gold, you know? Some of it was new to me, and some of it was reminding me of stuff. It's like, I know that. Why have I forgotten that? Right? And I think that because trading is so much about conditioning rather than just, you know, learn it and do it, right? And but where I'm going with that is that you've got to trade what you know, and, you know, and don't argue with success. If you've got something that's working, like, don't try and outsmart it. So I know that I don't have the ability to read Trump's mind, and if somebody else has the Donald Trump decoder ring, fork it over, because I can really make use of it. But, you know, and outsmart a bunch of militaries, and outsmart Putin, and outsmart the Easter Bunny. I mean, like, so, you know, even trying to do that is a little crazy. I mean, you really have to go, what do I know how to do that I've tested over and over and over again that I can rely on, and not put myself in a position where, if I'm wrong, which you're going to be, that it doesn't take you out of the game. I mean, it's really that simple. So we were talking a little earlier today about you know, about how do you capitalize on these giant swings in crude moves, just like gold, silver, any of the rest of it, without exposing yourself to a ton of risk. And it goes right back to what we were talking earlier, and we've put on the board over and over again over the last couple of months, is just, you know, buy options. You know, Lauren talked about that earlier as well. I mean, you can buy ladder up options, and there's all kinds of stuff you can do that where you have very little risk, but you can still capitalize on it if there is a big move. And you can also day trade, you know. Even in bull markets, you have down days. I mean, take a look at crude. The trend has been up, and yet, you know, Options Friday was an absolute bloodbath, and that was a great day to be short during the day. David Dubé, if you had paid attention to what he'd been saying, it would have been a great day for you. Just take a look at the early morning lean and go with the lean, and don't try and fight the world. I mean, there's a very fine line between being a contrarian and arguing with the whole world. I mean, you know, and there's also a very fine line between being disciplined and systematic and being dogmatic, where you're ignoring a fundamental shift in what's underpinning a big move. And, you know,
I think do you hear an echo? Am I the only one that's hearing an echo right now?
Is that me?
I don't know.
Hey guys.
Maybe when Rev is talking, maybe we should both turn off. I don't know. But I think when you join, Tom, all of a sudden it kind of,
okay, because I was fine.
But we definitely want you in here, and we definitely want.
No, I'll back out. You guys were having.
And don't worry, Beatty, no chance of that. Those aren't going anywhere for a while.
Rev, what do you
Thanks to crude, they're going to get new hubcaps soon.
What do you mean the Canadians gave us a medal? What was that part? I caught that as I was.
Go ahead, Danny.
No, this is Tom and Corey. I just said that I heard you say something about the.
Oh, did you mute me, Danny?
You gave us a medal. No, he's off.
I'm trying to figure out the echo. I don't think we had it. Is anybody else out there hearing the echo?
Not me. I hear you just fine, Danny.
Yeah. Okay. Okay. Good. Good. All right. So anyways, what we're really here to do today, we're going to kind of work into, oh yeah, one last thing. This would go for both of you guys. The crude gold trade. Gold has just been getting pounded. And that ETF that I bought has been going down too. But I mean, I get a lot of, I didn't buy a lot at the top. I've been scaling into it. And gold just doesn't seem to be able to hold a bid right now. Is there, that's oil related, is it not? Maybe Tom can.
You know
Yeah,
what?
there's a lot of people think it's a fairly spurious correlation, which I tend to agree with. But if it's a statistically reliable one, then you go with it, right?
Yeah.
You know, my gold silver trade last year was really simple. Is that whenever silver fell below 100 to 1 to gold, silver tended to outperform gold the following year, and that's exactly what happened. And then when it gets to 50 to 1, it tends to underperform gold. So it was, you know, so as far as the gold crude trade goes, you can argue that, you know, that some of it is to do with the petrodollar, you know, the US dollar, gold or crude being traded in US dollars. I mean, and a lot of people are nervous about that being, you know, decoupling, and that now it's a petro renminbi and, you know, or petro yuan. I'm not so sure that's going to happen. I also think back to your original point, Danny, that about the UAE leaving OPEC. I have no doubt in my mind that the swap line that they publicly requested from the US had something to do with that. I don't know if there's been news about it or not, but that also, you know, it's like, here's your swap line. That just guaranteed that the second biggest OPEC producer keeps trading oil in USD. So, you know, so there's an like, you know, I'm trying to conflate a bunch of points here at once, but back to your political comment there, there is that angle as well. So, you know, and that's what makes trading crude fascinating. It's not actually the oil itself. It's the fact that it threads through everything. It's like, I mean, energy literally is life. And then, you know, last thing I'll say about that is that, you know, that's why I really enjoyed what Lauren had to say, is that she was connecting a lot of dots for me with the ags, where it's like, now I get how that fits into things, you know, and I think that's really helpful. I mean, we're all largely technical traders here, right? But you have to know when, you know, like there are limits to, you know, when you should make a bet when two lines on a screen cross. And, you know, and this is a great time to know what those limits are, because, you know, this is not, these crude moves are not just technical moves. There is 20 million barrels a day of the 102 or so that is disrupted, and at least 10 of it is offline. Like, we've never had that happen before. And so you can't sit there and go, well, what, you know, statistically, what has happened? There is no stat for it. Now you got to look at fundamentals and look at positioning. And the funny thing is that there's still a lot of guys trying to short into this crude market without realizing that they are fueling the very move that they're trying to fight.
Well, I kind of thought it was part of like a rotation, that people selling metals and getting into the hotter topic and moving into crude. Is that part of it?
Yeah, historically that has been the case. I shy away from that, Danny, just because I'm not convinced that's it. Like, I'm not convinced it's that one for one. It's kind of like when you see, you know, crude up one day and the NASDAQ down, and people say, oh, there's a rotation. Well, how many guys do you know that are selling NASDAQ futures and buying crude futures? Not very many. I mean, I'm sure people are doing it, but is that a coincidental thing, or is it a causal thing? And, you know, so that's a lot of words to say, I don't know, but I don't believe it. I mean, I've heard that. I've had it explained to me many times. I'm not convinced. Doesn't mean it's not true. But that's just not part of my process for trading crude.
So Tom,
Danny, I turned my mic back on. Could you hear me now? Is it giving you an echo?
No, we don't hear an echo now.
Rev, at your end, is it giving you an echo?
Is there any questions before you guys kick me off of here?
I think we're okay. So Tom, I got a couple of quick questions for you. What chart do you have up here? You've got gold.
That's true. I'm sorry. You were talking about gold, and I kind of made some comments earlier. I think it was Monday and last week. We're kind of, the crude market is. This is even a 30-minute chart, but it goes back to December. It's basically all year. We're pretty much in a balance area. Structurally, we're kind of bouncing back and forth between the 43.76 and the 42.65 or 52.65. And, prices are just kind of balancing back and forth. And, one of the things I do is, what's the market trying to do? What's it trying to accomplish? It bounced back in March, end of March. It tried to rally. It should have been trying to go towards the high end of the range. It couldn't do that. And I made a comment, if we break below this, in fact, I'll put profile up. And if it breaks below the 46.76 area, that we're probably going to rotate back down to the 43.83 level, or 43.80 roughly. So that's kind of my 2 cents on gold and how it's reacting. I didn't like very much that it couldn't get back up to the top of the opposite extreme when it bounced, and that kind of that's kind of concerning. Is it just for prices of gold? The crude Rev was on Monday with Manny and I, and made a good call. He was looking for it to go higher. He was telling us about the 3-2-1 crack spread.
That's right.
So give you, as the kids say now, the flowers. That was a nice call. It's done nothing but go up since Monday.
Yeah.
Wait, I don't know if you could hear me now. Did you? I do want to make one comment about the Canadians gave the Americans a medal or something. I gave was the.
We let you win.
Awful nice of you. See,
I mean, the S&P futures, seem really resilient here. I mean, they're not breaking.
No, again, if I could just throw my 2 cents, is from last September, we've been pretty much in a distribution that's been, I don't want to say balanced, but it just didn't do anything. And we broke down when we went into the war end of February. We had the sell-off, and obviously I looked it up. I did some research, and I think it was if I'm not mistaken, it's like the 7th or 8th largest 13-day rally since 1980 in the S&Ps. It was a huge rally. I mean, the magnitude there's only been a handful that I've seen, but we broke above this, the 70-90-ish area, 70-88 area. Once we broke above that, I would have liked to seen a little bit of energy pushing this higher. It's just not. It doesn't mean it's going to sell off, but I'm just not getting the energy. So we're kind of stuck between the 70-88 level and the 71-81 level. Friday, we broke above that, but again, is Monday morning, we were talking is if we break below the 71-81 level, I'm still bullish longer term because we're still above the 70-88 level, but I'm a little bit more neutral because the auction went above, tried to break off, and they couldn't do anything with it. There was no support above the 71-81 level on the E-minis. And that's my 2 cents. So I'm kind of neutral on this. And when markets are neutral, and all traders know this, when we're in a tight spread like this, it's indecision. That's all we're looking at right now. they're not aware of.
I've
they're
been
new
writing
open.
in the open. I've been writing in the opening print for the last 2 or 3 weeks. So we're in this kind of, and you can see it in your channel that we've been in a big back and fill pattern. You know,
Absolutely.
I mean, whether it's 50 handles or 70 handles, it's not breaking down and it's not going up that much.
No, it's
Like it's kind of like it's kind of stalled at 7,200. I
Mhm.
I think that's probably a fair assessment.
It's it's kind of tough. It's a very difficult from that standpoint. I mean, since I spent a lot of time in the equity market, there's sectors that are moving. This whole thing is just, if you take a look at the charts, the only thing that's moving this market is technology.
Yeah.
If you go through these sectors real quick, I use a State Street. This is the rally that we've seen off the lows. But here, let me switch this to a daily, get a better idea. This is technology. Here's give you an idea. Here's the S&P. There's technology, very similar chart. Let me open it a little bit. Discretionary didn't hit the highs. Financials didn't even go close to hitting their highs. Energy, the stocks haven't. Industrials haven't hit their high. They came close. Healthcare, not even close. Staples, they're way down. Materials, they drifted higher, but they're backing off. Communications, they kind of tried to challenge it. They couldn't have it. Utilities, but the one that's kind of surprising is real estate. I mean, it's not at all-time highs, but this is one of the sectors that has kind of outperformed real estate.
Thank God for that.
Oh, that's right. Congratulations.
Yeah, well, we sold one house. We think we got the other one sold too now.
Nice.
So
Then you can
that's
sleep
lowered
again.
up my bank account.
It's called carrying cost.
Yeah. So we've got the Fed meeting today, and I don't want to take anybody's thunder, but Jason Carter called me, and this is the second to the last meeting for Powell, right? And he made an observation, which I'm not sure it fits, but in Yellen's last final meeting that it ended in January 31 of 2018, she did not raise. Did she raise rates on her last raised interest rates in her last meeting? That's what he said. Now, I don't think there's any possibility of that. I mean, I think that the Fed fund rates are showing that there's like a very small chance of even raising this year now. I mean, has anybody kind of kept up on that?
You know what? I looked on Kalshi, and they had for today a 1%. But let me look it up.
A 1% probability.
1%. Yeah, it is 1% that they're going to raise to make a change today.
So, I mean, it's probably going to be a nothing butter.
Mm-hmm.
But Powell is going into this is the second to the last one. I'm wondering if he's going to take any shots at the administration on the way out. I mean, clearly hey Manny. Clearly, I think he's entitled to take a couple of shots. But I didn't keep up with it. I mean, when I wrote the opening print last night, I intended to look at the Fed funds and see what are they still calling for 2 or 3 rate cuts this year?
The one I pull up, Kalshi's got a 53.4% chance of a rate cut before 2027.
One rate cut.
They don't say, but a rate cut, yes.
Let me see what they say.
In February, it was at 96.
I'm sorry. As of late April 26, markets are heavily favored for the Federal Reserve to keep rates steady. Approximately 66 to 70% chance of no rate cuts occurring in 2026.
Mm-hmm.
I mean, that's not a really great forecast.
Mhm.
But I mean, these markets don't seem to really care. I mean,
No.
Stu, what is the best symbol to use for Lotto? Should Powell take a shot? Oh God, I don't know. I mean, one of the funny things, and I talked about this, was, we've seen such a dramatic shift in information trading, right? It's unprecedented. I mean, I've talked about this when we were on the trading floor. There was a Bear Stearns customer that was going through our desk, and his name was Bert Friedlander. And I don't know why he wasn't using Bear Stearns, but I think they threw him out and we just inherited him. But he really did call the desk one day, and I can't remember exactly the timing of it was, but he said, "Hey, the Fed's going to do an intermarket rate hike, out of hike," and I never heard of anything like that before, and all the time of being on the trading floor. And I did pick it up a couple hedge funds. One was More Capital, which was a $21 billion hedge fund, and a couple other guys, and said, I don't know that this makes sense, but they're talking about like raising rates tomorrow or something. And they were like, "What are you talking about?" And sure enough, the next day at 10:30 in the morning, they raised interest rates and the S&P tanked. Don't think Powell will, but why not? Yeah, I mean, Stu, I think anything's possible in this, right? I mean, the way this is going. But I thought Manny was going to come in here. Maybe he would join us. But I don't know that we can carry this into the Fed meeting. Let's see, what's bank? Oh, let's see. Unusual whales. B of A predicts a December rate cut. And yeah. Are you in here, Manny? Hey,
You're good.
Manny.
You're good, man. Hey, good afternoon, sir.
Yeah.
Hey,
I don't know how big it's going to be.
Danny Trump.
Yeah.
Mhm. No, I was mentioning is Kalshi has it at 1% of a rate hike. And you look at the 2-year, because they're going to follow the 2-year. The 2-year is not telling us anything. Yield on a 2-year is 391. So they're not really saying anything about they're not pricing in a rate hike. So if there is one, I think it's going to be a surprise the street, and there will be a pretty violent reaction.
Oh my God.
Right. Yeah.
Well,
Mhm.
well,
Well,
the
it's all-
decision.
For everybody tuning in, thanks for tuning in, and we're about to find out in 14 minutes.
Yeah,
so don't go anywhere. Hang out here.
2 o'clock's a decision, but I think I read something. If Powell leaves, Trump would get the majority on the Fed board. I think I read that in the Wall Street Journal.
Yeah, so I think that the guy, I saw a snippet of his Senate confirmation, right? And the guy's like willing to, he's obviously very wealthy. He's vested. He's willing to put 100 million of his assets into I think it was like the way they phrased it was very clever, like in a non-denominational fund, whatever that means, right? But I guess he's just doing that to make the Senate happy. And also, look, the guy is coming in.
Kevin Walsh.
He's being appointed by Trump, right?
Well, so did Powell. Powell was appointed by Trump.
Yeah, but prior to
by
Trump,
Obama.
And so remember on Trump's last cabinet, right? He had all these cabinet members that were kind of political appointees, but that then he found out that those guys weren't willing to do what he wanted, right? And with that, you had the Comey issue, and you had the Mattis issue, right? So then on his next administration, what did he do? He just put in a bunch of guys in there that are going to tell him and give him what he wants, tell him what he wants to hear. And so I would think that this guy's going to be no different.
Trump put Powell in, but it was Danny, who was Trump's Treasury Secretary the first term.
Trump's Treasury Secretary.
When did he insert Powell?
I think
it's the Treasury Secretary. God, I forget his name. Mnuchin, correct. Thanks, JB.
Thanks, JB. Appreciate it.
That was Mnuchin's guy. It was his recommendation.
But I thought Obama brought in Powell.
No.
Yeah, he was a Trump appointee for sure. For sure. I think obviously after that awkward moment at that Fed building, right? I know he's definitely regretting that. I mean, you could cut the tension in that room with a sword. Trump doesn't like to be corrected in front of the cameras, and Powell's like, no, I don't think you're right about that.
Now the S&Ps are gone, Ben.
Yep. So I'm gonna, if you guys are trading this right now, if your position is good, take some profits off the table. Just sounded pragmatic advice, right? Because we're in 11 minutes, the fireworks are gonna go off. If you have something good, if not, try not to initiate right now, right? One of the things that we try to do here is drive the mindset that delivers consistent profitability. And there is no way to tell which way this thing's gonna break, what the algos are gonna do. You'll immediately see that the liquidity thins out in the book and they go bonkers, right? So let's just make sure that we keep everybody safe. And then we don't want to trade the move, right? Because we all know that the real move happens after 2:30, right? So let's make sure that everybody's safe, and positioning is everything. Size down. Don't overtrade it. Don't click yourself broke, right? Wait for the reaction. Trade it later rather than earlier. Today is not the day to predict, guys. Wait, read, react.
It says that President Obama appointed Powell to the Federal Reserve in 2012.
Yeah, but Trump made him the chair.
Yeah.
Appointing his Treasury
Is that what it was?
Yeah, but it was Mnuchin's guy, who was Druckenmiller's guy.
Yeah. That's right.
Here's another thing to watch, right? So look, the 10 years on highs right now, right? Watching 10 years at 4.394. The bonds are going to tell us a lot, right? So if bonds catch a bid, the market is going to be leaning towards easier conditions. If bonds sell off, market's pricing in tighter conditions.
The 2 years is going to be obviously a little bit more reactive.
Well, I got long. I've been long a couple times today. One of them was I had a good profit on one trade, and then I walked out of the room, and then those headlines came out. But I think they want to go up. They seem to deflect all this news out of the Middle East. I don't really get it. You would think.
No, that's a good point. It really is. It's a good point. They are absorbing it, and that's usually an indication that things are going to go higher.
I mean, you would think with oil prices like this, the stuff would be getting pounded, but it.
Yeah, right. That's oil broke out above that 105 level that we were talking about earlier this morning. And look, guys, I think that. So I wrote a guest piece for the opening print, and I said that I thought that things, I don't think the war is going to be a trigger, but there are signs already that things are starting to shift. Right. And the last time I saw this look just in the underlying book, in the order flow, this was back in February and March. And so I think what we're seeing here and the tonality of the market is telling me that we're seeing the same thing right now. Are we going to sell off? No, but I think this is more similar to distribution, right? So the market can't go any higher, but refuses to go lower, right? So markets break to the lows. And all of a sudden dealers and market makers are out, right? But when it goes to the high, what are they doing? They're unwinding, taking positions off, selling into those highs. So we can't break higher, but we can't break lower either. And until we break out of this range, that's the read. Now remember this. The last time we were in this type of environment, we stayed in it for close to 3 months. So while I'm not saying that we don't make a new all-time high, I'm just giving you my read on the book. The book is suggesting that we're in a distribution phase. Profits are coming off. You can see it in the dark pool index. You can see it across the board in the book. So maybe that changes. I read it every day, and I put it out in as part of our morning prep. So look out for that every day. And if there are any changes and it does get bullish or bearish, we'll be the first ones to bring it to you.
Yeah.
So I wanted to ask you guys, what do you think here, right? So, so obviously we know it's not the first move, it's the second move, right? So what are the tactical takeaways from trading, after the 2:30 event? What do you guys think?
I'm sorry, I didn't hear that.
So what do you guys think here, right? What are the trading takeaways, right? So obviously we know we're going to wait for after the 2:30 move, right? We know not to overtrade it, but then say we check all those boxes, right? We get the 2 p.m. statement, Powell goes and speaks at 2:30. After that, liquidity re-enters the book, and we can kind of get more predictive, a more predictive trade, right? So if we're trading down here at 71, between 7,100, 7,150, the lower portion of the last 10-day balance area, are you guys taking it long, or are you guys waiting it out to see if it breaks below? What's the trade?
I'm waiting for a break one way or another with the structure.
Well, I mean, there's a lot of people that don't even want to trade on Fed days, right?
Sure.
I mean,
Smart. Smart.
and I think there's a good reason for that. I know Handle Stats doesn't want him. You know, he never trades Fed days. I think maybe one of the takeaways would be is if you are trading, that you trade up to the announcement and maybe flatten out. I don't know. I mean,
so I'm looking at here's what I think, right? So it's not the decision; it's going to be the reaction. So I could care less what he says. The tape will tell me, right? But if we get down below 7,100, if we sell off violently, we get down below 7,100, and we test maybe as low as 70, 75, 70, 50 on some violent sell. If we reclaim 7,100, I'm going to look for some acceptance. I'm going to look for a couple of prints to close above that level, and I'm longing it. If that fails to happen, then I'm just going to sit on my hands and wait. I really want to get a trade that makes good sense. And if it blasts off and it skyrockets, above 7,200, above 7,225, then maybe I'm thinking, short-term scalps, momentum scalps, look for trend line breaks, get in on pullbacks and see what I can get. But I'm not going to stick around for long. I'm gonna get my 5-point, 10-point scales, and then I'm stepping aside, moving to break even quick. Consider myself lucky if I can get one or two of those.
yeah.
Real quick story. I know we were running up on the hour. We got fired. I used to be hedge fund manager, co-hedge fund manager. We got fired by a client by not trading our system to the full capacity during a Fed announcement.
Really?
Yeah.
Yep. They asked it. He says, with your volatility of today's action, why isn't it showing up? And he says, well, we just, because of the announcement, we pulled out, we pulled back our allocation. And he goes, well, you're not doing what you're told, what you're saying. So they pulled out.
Wow, that's interesting.
Well, you see that post in the chat, Manny?
Hang on a second. Let me just check it out here. Hang on.
Yeah, that's all coming tonight. Yep.
Oh, yeah. So J. Mark points out, who would want to be short in front of the earnings this afternoon?
Yeah,
great point.
More on the earnings.
See, that's the great part about having this awesome community that we're a part of, right? Check out pitbulltraders.com if you want to join there, right? But we have a great community of some really astute traders, and they're constantly posting stuff. And it's a trader collective that Danny often talks about that really, it's a bunch of guys, smart traders, all sharing information. And he points out, going into this afternoon, we have Microsoft, Meta, and Amazon reporting, right? So that's 3 mags going to report.
Google, Meta, Microsoft, Qualcomm, all these are going to have an impact.
Yeah. So on top of the Fed, we have the juggernauts reporting tonight. Oh my God, it's gonna be fireworks, guys! Bring out the popcorn, guys.
that may be why Handle Stats doesn't like trading on Fed days.
Yeah, I mean, who can blame him? Obviously, right? So that's something that we often talk about. He's probably been taught a couple of lessons on that day, and he just decides not to trade it.
I don't. Anytime I look at Intel, I think of Handle Stats.
Yeah. Well, I mean, he's killing it. I mean,
I looked at it. I says, I hope he margined everything he had to the max because he's loved this stock.
Yeah. So look, J. Mark just pointed out. Look at the numbers from Intel, NXPI, and TXN. All good numbers. Yep. Strong. Yep. What do you think, JB? JB's another trader in our community. Really smart trader. Always willing to share his opinion. I'd love to hear what you got. What you think, JB? What do you think going into this Fed announcement? Oh my God! Wait, hang out. Time out, guys. We're coming down to the wire here. It's 1:59. All right, we're breaking out here soon. Let's make sure we have live squawk on. Let's make sure we have we can get the news out to everybody as soon as possible.
I'm gonna watch the 3-year yield and see what happens.
Get ready, fireworks time.
Yeah, headline time. If we don't already have enough.
Yeah, right. Oh crap! I'm missing my
10 seconds.
10 seconds, guys. Here we go. Ready? Secure your chin straps. Get your elbow pads on, knee pads.
Fasten the chin straps.
Unchanged as expected, unchanged.
Unchanged.
Hamak Kashkari, Logan voted against easing bias. Says that votes 8-4 to hold benchmark
Not seeing
rated.
anything
8
yet.
to 4
Within the
vote
range
to
of Middle
hold
East
it.
developments adding a high level
8 to
of
4.
uncertainty.
8 to 4 vote,
Governor
guys.
Stephen Moran
The whole rate's
dissents
hazard.
in favour of a rate cut.
Unchanged as
with
expected.
Hamak
However,
Kashkari,
Kashkari
Logan
and
voted
Logan vote
easing
against
bias.
easing. Buyers say the vote was 8 to. They say that the vote was 8 to 4 to hold
economic
benchmark
activity has
rate
been
within the
expanding at a
range.
solid pace.
Middle East developments adding a high level of uncertainty.
There we go. Yeah, I'm starting to
Governor
get it.
Morant dissent in favor of a rate cut. Hammock and Logan voted against. Racing indications
they held
suggest
steady at
economic activity has been
3.75%.
expanding at a solid pace. Job gains have remained low on average, and unemployment rate has been little changed. He characterized inflation as elevated versus somewhat elevated in previous statements, citing global energy prices. The committee
Yeah, the 2-year kind of
going to give it to you as live as it comes in. The committee is attentive to risk on both sides of the dual mandate.
Fed rate decision and policy statement draw the most number of dissenting votes since October of 1992. Wow.
bond market didn't move. I mean, a couple ticks, but we're right back where we were.
And you know what? Look, so a muted reaction here, guys.
I'm just going to hold my long.
Yeah, it's pretty smart. That's pretty smart here. I think that. Look, I mean, if I was expecting, a violent rip down to 7,100, right? 50-point dip on the Fed day is not out of the range of possibility. But what did we get? We didn't even get a volume spike, guys, here, and I think that goes back to to the thinking that we're in a distribution phase, right? Hold the prices high while we unload. Keep them in check. Let me just check the volume here. No reaction in the VIX. I mean, it's up 4% today, but
does Spygate show any buy or sell orders?
Nope, I'm not hearing anything. Yeah, good point, Tom. Let's just double check that here, because that's always a big tell. And for everyone who doesn't know what Spygate is our in-house institutional trade activity tracker, right? So it lets us know when institutions are executing large buy and sell programs. Typical, run-of-the-mill program is 50 to 100 million. Big ones eclipse that, $300, $400, $500 million, and it's leaning more towards the sell at 1.3 billion today. So there've been more institutional sell programs than buy programs. But look, even with that being said, I don't think that there's much to read into that because prices have held steady. I think that the real move comes after 2:30. I think that's what we're going to see here. I think everybody's waiting to read between the lines.
I just got flat.
It's always good to take. Here we go. We're dipping now. Let's see. All right. So at the announcement, we were trading 71.58, I believe, and now we're down just 8 handles to 71.50. On not impressive volume.
Yeah, it's just drifting.
Yep. We'll see. Let's see. I would venture to say that we can easily break the range on both sides of after 2:30. But look, again, I think it goes back to what we were saying earlier, right? That I think people are going to wait to hear Powell's statement for guidance, and I think that they're going to be reading into that. And even looking at it, like I'm looking at the dome here and my order flow stuff, and the book did not thin out. So You know, they always know before we do. That's for sure. At least some of them.
No movement in crude. No movement in gold. This is just muted across the board.
Yeah. So Marlon asked, you know, where's our ABC wave? Right. You know, that's what you would expect here after an impulsive wave 3 higher. And now we've just petered out and come back in. So maybe we do get that A move down, that retest the prior all-time high down at 70.31 at least. I mean, that's not out of the question. I bet you there are a lot of people looking at that range, right, to lay out some more longs and look for that final wave high.
Manny, can you throw up Spygate?
For sure. Let's get Spygate up for the people watching, and let's see if there's any activity there. Coming at you in a
It
second.
looks like they had some sell programs going right in there.
All right, guys. For you guys watching at home, I'm going to blow out the Spygate program here. And again, this is a really tight time, really small time frame, a 1 minute chart. So we want to kind of drown out some of the noise. So you can see here on the pop, right, there was a sell program that went off. 7 sell programs went off there at the high, countered by 3 buy programs. But ultimately, those sell programs overwhelmed the buys. And then you can see here what the totals were on those sell programs. So you can see here we have 1, 2, 3, 4, 5, 6, 7 sell programs. And for roughly, let's see, 8 times.
Can you screen share it or no?
Yep, it's on the screen.
Yeah, look at it's.
Yep, it's on the screen.
I don't see it.
Oh,
Okay.
Uh,
And I got Marty calling me. Hold on.
Yeah, so those sell programs were for a total of 400 million, and then they were immediately countered by 2 buy programs for about 140 million. Yeah, I think what we're seeing here is just cold feet, right? People are waiting. People are waiting.
It's just drifting.
That trend line we drew on the early morning prep show held like a champ all day long, and now we're trading lower. Seeing some activity here. Liquidity still looking okay in the book. We just tested as low as 71.46 quarter. Surprise, surprise, that's yesterday's low. Tested it to the tick. Maybe we went below by 1 tick, and then let's see if they push it lower here.
Yeah, I don't trust too much on retail, and that's you get something hits it by a tick or two. It just says retail traders.
Yeah. I think sometimes I think when they we all know how much ES loves to trap, right?
Mm-hmm.
And I think that when they push price below a level to try to see if they can attract more liquidity, attract sellers breaking out when they're breaking to new lows. I think they get it to a certain level and then they pull off the throttle, pull back the liquidity, and just let, point and click traders kind of push it the rest of the way, see what they're at. And those are the sellers that are selling and they're buying into those lows. And then they, continue that buying program and get it back above where they want it. But yeah, you'll frequently see that, 1 tick, 1 point to low, and then it moves off. All right, so that's kind of what we're seeing here now. Right back down here, we're trading at 71.4250. Careful down here. Remember, we have that announcement coming in here anytime at 2:30.
Both the yields are drifting a little bit. Nothing dramatic.
Yeah, so we're up now to 4.399 on the 10s.
Yeah, they're drifting just a little bit higher.
Here we go, breaking to new lows. 71.4050, new low. So JB suggested in our chat, he said he's probably running a straddle until earnings. I think that's probably smart. Yeah, that's a good play. JB Smart. So it says here that Stephen Moran preferred to lower the target range by 1/4 percent point, a dovish descent for a rate cut.
I'm sorry, who was that?
Moran.
Okay.
Logan supported maintaining the target range, but opposed the inclusion of an easing bias in the statement. Hawkish dissent again, signaling potential future rate cuts. Thanks, Marlon. All right, 71.40.50 is our low right now. A whole two contracts that's traded down there. Those guys are pressing. Probably some retail guys chasing down there. Taking out that low now. All right, so guys, remember, right? We know the levels we want to watch here. We're still, like as we covered this morning, we're still in that beefy part of that last week's distribution, 71.40, 71.50. I know it's a wide band, but that's what it is. 71.37.50, that's how low we went. Let's see what happens here. Yeah, and Rev points out crude is skyrocketing. Dude, crude up 7%. And Rev points out that the CLES inverse trade seems to be recoupling. Yeah.
Well, there's one thing for sure. The Pitbull's always trading. It doesn't matter if it's a Fed meeting or the end of the world. He's still trading.
Oh, yeah.
You know, there's an old story that I've been telling. Well, it's not even, I've been saying it for years, actually. If it doesn't make you happy, don't do it. And it's not making him happy, I'll tell you that.
Oh, man. Yeah, I get that. There are some days that I don't want to trade, and those are the days that I typically lay off of it.
Danny, Monday, we started talking. You need to tell us, Danny, about the turtles.
Oh, yeah, Richard Dennis, right? Hey, Danny, I saw your post on X about Paul Tudor Jones. That was interesting. Maybe you could tell. Oh, so really quickly, before Danny gets into that story, I just want to lay out the trade here, guys. So yesterday's low, 71.46 right? If we can get back above, get back into yesterday's range before the announcement, show some acceptance, then we'll start looking for long trades on pullbacks that get us back into the overnight range up at 71.61. And yeah, Danny, so I saw that post you put on X about Paul Tudor Jones, and you mentioned recently that you knew Richard Dennis, the famous turtle trader. Maybe you can share some of your stories with the folks watching.
Well, I can share one story that
it doesn't get you in trouble.
There was we were doing Tudor's business before the 87 crash, and you know, he was circling the pit all the time. And obviously one of the things I wrote about in the opening print is that, you know, really good traders have plans. They go in like you, Manny, you've got your levels and you've got your setups all ready before you start trading. And there was a lot of reasons for the 87 crash. One of the things that Tudor had talked about is that the market had just gone too far. Interest rates, there was a bunch of different reasons that I listed in the opening print. But I'm going to be honest about this. This is a very, very true story. And it kind of strikes at the heart of the way the CME operated on the trading floor. And I've talked about this before. It was called dual trading. You know, and I'm not out to knock anybody. I mean, but over the years, I've heard about all these different traders talking about, oh, I made $1 million in the NASDAQ. I made $2 million here, and I lost it all. And I never wanted to hear any of that. If you made big money, and I talk about this with the Pitbull all the time. There's not a real reason to take on huge amounts of risk if you've already climbed the mountain, you've been to the top of the mountain, And I always say that I've been to the top of the mountain, or at least the little mountain. I've been to the bottom of the mountain, and I'm kind of somewhere in between. And being in between is okay, right? But when it comes to what the Pitbull's doing, I don't really get it. He made tons and tons of money, and he's been taking on enormous risk. And he had Netflix, and I talked about that. But one of the things about Paul Tudor Jones, he had a partner named Peter Borsch, and there was like 3 different big hedge funds back in the day. One was Bruce Kovner. I can't remember what Bruce's fund was, but he raised a lot of money out of Prudential Bank, and we had these women that were calling the phones and screaming at us all the time. And then we had Paul Jones using the desk, and and then the other one was More Capital, Lewis Bacon's hedge fund. And all these hedge funds were, 17 to 22 billion. And back in the day, that was a gigantic number. It's not so big now. You've got multi-billion, you've got $50 billion hedge funds. You've got even more than that now. I don't even know what BlackRock runs. It's gigantic. But anyways, Paul, when it seemed to me, and you can only remember what I remember seeing, was that Paul Jones was always the first of the 3. And all 3 of those funds were very close together at the time. And Paul Jones would call our desk and he'd say, Danny, sell 300 now, get them done fast, And then about a minute later, either the Kovner's fund or Lewis Bacon's fund, More Capital, would come in and say, sell 500, sell 400. And then Prudential, the Bruce Kovner's fund would come in, usually the last one. And they'd say something like, sell 400 and, not held. That means that the broker had discretion to not press the market down. Well, Tudor had already sold, Bacon had already sold. Now you got Bruce Kovner's fund coming in and saying sell 400. And remember, back in this time, and I was talking to somebody today on the phone. Her name's Sandy, and she was a clerk at BNP, and Sandy Rollo. And she was talking about the multiplier in the S&P, and back then, it was $500 a tick, and $500 a point or a tick. Mm-hmm. So if it was even bid at 05 and you sold them at 05 and you bought them at even, you made $500 per one lot. So if you were doing 1,000 lot, or you were doing 500 lots or whatever, 400 lots, 300 lots, it was $150,000 a tick on a 300 lot. And there was something called dual trading back then, but it wasn't just the dual trading. There was so much front running going on. And again, a lot of people from the floor don't like it when I talk about this. And they never liked it when I talked about it. And one of the things that Manny and I have talked about is what I think makes what we're doing is special, is because we really are kind of like what I was trying to do on the trading floor, to do the right thing for traders. And again, if the bid, it's 70 bid at 80, and somebody calls up and they say sell 10, and then all of a sudden a half print pops up on the screen, and then they're 80 bid, 90 bid, even bid. they would do that all day long. You know, or if you had, let's say that it was half bid in the S&P pit, and they're saying it's half bid for 300, you know, and I'd say sell 400 at a half, and then all of a sudden there'd be this delay, and you know, I would always count. The order would come into me. I'd look at the clerk. I'd say sell 400, and all of a sudden you get this delay. I go 1, 2, 3, 4, 5, and then all of a sudden the clerk would turn around and go unable, and I'm like, unable, you know, and that was like somebody in the pit, the broker, instead of turning around and saying, hey, the half bids are in two different guys. He'd look over and go, hey, what are you doing? And the guy would say, I'm half bid for 200. And he'd look over to the other two guys and he'd say, what are you doing? I'm half bid for 100. I'm half bid for 100. And instead of going, hey, I'll sell you 200, I'll sell you 100, I'll sell you 100, right? Because that's how quick it went. And what they would do is they'd say, sell 460. And then he'd go, sell 500 and a half or 400 and a half. And then all the locals in the pit would get to sell those halves. And then all of a sudden I'm looking like a moron because I quoted that there was a half bid for 400 and 300 or whatever. And I didn't get any of those prices. Now all of a sudden the guy on the phone's yelling at me saying, what the fuck happened, you know? and this was a lot of money. I mean, I remember Marty put in a 150 or 200 lot order where they showed me a bid, and literally they just kept offering it down and offering it down, and then there was never any half bid, or there was never any 70 bid or 20 bid, and it cost like $180,000, you know, like that. But one of the things that happened, I'll get back to Tudor, was in '87, you know, it was the most advertised crash ever. There was a Elaine Garzarelli. Yeah, here, let me.
She didn't call that. She did not call that. I was at Lehman when she.
Yeah, it was like all sorts of guys that were calling for it. It wasn't just Tudor, but they did work together. I believe that they all had, you know, there was a comparison about 1920. You know, all these different analogs and all that. Tom, you remember that?
Yep. Oh, yeah.
Yeah. And, but anyway, so Tudor would go through my desk, and then he'd go to another desk, and then he'd go to another desk, then he'd go to another desk. And at the time in the S&P pit, they thought that there was an FBI agent in there. And it was, you know, and there was a guy in there that they accused of being an actual agent for the FBI. But in reality, what that guy was, is he actually worked for Paul Jones in the S&P pit. He traded his own account, but he knew that there was one desk that would start that rotation. I wouldn't necessarily be the first of that rotation. Tudor had their own clerk. And the first order would go to Tudor's own clerk on the phone that we would see. He would never put in any orders. If you looked at that video that I put up yesterday of Tudor talking and put in orders, he would say to the clerk, he would either say, hey, sell 2,000 at this price and show them all, you know, or he would say, put this order in, don't flash it, walk it into the pit. That way no one knew. You know, the guy would walk up to the pit, he'd act like he's bullshitting with the clerks, and he'd say, yeah, you know, sell 1,000, and then he'd walk away and he wouldn't even look. He'd have his back to the pit. He wouldn't, and you wouldn't really know what was going on. But Lou Petrovich, the order filler back then, was very good at like not showing size and getting orders done. Now, this is where the story happens. So Paul Jones, and I think he's one of the greatest traders. And again, I think this goes back to having a plan, and he had a plan. He really did have a plan. And what happened was we were taking these orders, and this at the time was a reflection of my desk, but he later, when I talked to him, he said, Danny, I know this isn't you. You know, we like you. But one day on like a Wednesday after the close before the crash, this was several weeks leading up to the 1987 crash. And remember, it wasn't Black Monday. It started on Black Friday. That, everybody
Yeah,
keeps
It
thinking.
was down 105.
Right. Right. And as I wrote in the opening print, this is a great story. He called me up. He says, Danny, this is Paul. I'm going to be in Chicago, and I'm not going to mention the guy's name that was in the S&P, but I don't want to get any trouble. I don't want to get sued or anything. I don't think. I'll just say his initials were PH, and he said, I'd really like it if you and Jimmy Ace, the broker, Ace, Jimmy Place, Ace would come to my house, come to my friend's apartment at Lake Point Tower, at 6:30 on Thursday night. I'll be there. So I go into the broker in the pit. His name is Jimmy Place. I said, Jimmy, you're not going to believe this. I had a kind of a bad feeling about it. And he's like, yeah, he had a limousine. He's like, yeah, we'll take my limo over there. You take a cab. I'll meet you there in the lobby, and we'll go up and talk to him. Maybe we can get a lot more business out of him. Yeah, maybe not too. And
Take trade.
so we get up, we get there, we get called up into the apartment, beautiful apartment overlooking Lake Michigan. And we sit down and we talk, and some small talk. And he looked at me, he goes, Danny, you're a good guy. You're a good clerk. You pick up those phones and you give a good quote every time. He said, we know that you're out there, you're fighting for these guys. It's one of the reasons that we use your desk. And he said, but Jimmy, I want you to come over here. He goes, I want to show you something on these screens. And there was a guy that worked for the group. And remember, this is the way it worked back in the day. And this is the reason that Tudor had his own guys on the floor. And he says, Jimmy, I got to show you this time and sales. Now, I put this order in with Danny at 10:01:20, and he quoted 20 bid, and I told him to sell 300. And here's my fill. I got 10 lots at 20. I got 20 lots at 10. I got 30 lots at 80. I got 40 lots at 70. And then I got the balance all at one price on the low tick. And I just went, oh, shit. And I knew at the time that there was this guy, his name was Mike. And every time the orders went into this guy, there was something called dual trading. And he was part of that delay tactic that happened. And I don't know why. He just sucked. And his badge was MGA. And I knew going in when I put those orders in that always something bad was going to happen. And then we get the fill. So in other words, they would lay off the order, right? And this is for Paul Tudor Jones, right? I mean, and then he so 30% of the order was filled, at the upper end of the range, and 70% of it was filled on the low tick. And then what that left us with doing was that left us reporting a fill. We're getting pretty close to Powell, right?
Yep. Just wanted to point that out here, guys. Powell will be out in a few seconds here, so stay
Well,
alert.
I'll finish it up real quick. And then he does another time in sales and shows this to Jimmy. And Jimmy says, well, I'll get this straight. Well, by that time, it was only about a week and a half away from the 87 crash. And we ended up not getting any more orders from him. And I remember the funny thing is that that Monday was the Monday of the Black Monday, when Capcom, the big firm that was going through us from Saudi Arabia, was the Royal Saudi family. On the Thursday before the Friday crash, I don't know what they were doing, but they would sell 2,000 on the open every day, and then they would buy 2,000 back on the close, and they were short 1,000. On that Thursday before the 87 crash on Friday, Black Friday, they bought 3,000. And then they watched the market go down on Monday. And I'm sure Paul Jones was just laughing his sides off when this happened. He calls up, the guy from London, from Capcom, this is the old story I talk about. On Monday, about 10:30 in the morning, when the markets are just getting shit canned, this guy Punkage from Capcom London calls up. He's like, hello, Danny, this is Punkage. I'm like, hey, Punkage, what's up? He goes, Danny, if you get a phone call from the Saudi Arabia trading desk, do not tell them that we bought 3,000 on Thursday. And I'm like, I am not going to fucking say that. There's no way in hell I'm going to tell anybody that. He said, Danny, in this case, sell 3,000. And I'm sure Tudor's desk was looking at that, watching that. And I'm telling you, within 20 minutes, there wasn't a bid. You couldn't sell anything like that. You know what I mean? The only bids that were left in the pit were for program bids. And every time they hit one of those program bids for Morgan Stanley, the cash just dumped and dumped and dumped and dumped. And I remember looking up at the pit and going, how many do I got done? And they're like, you got 600. And I'm like, oh my God, Capcom soon after that ceased to be a clearing member on the trading floor. And I never knew what really happened. Never did any more of that business either. But like I said, I did end up talking to Paul after the crash. And he said something to me. He goes, Danny, we know it wasn't you. He goes, we got such good recommendations from the guys at More Capital. And, that's how you got the account. He said, if we get back to trading S&Ps again, we'll make sure we give you a call. Well, I don't think he ever, he never came back after that. I think he made they said he made $100 million. I think it was way more than that. But that's not a good way to lose the account. But again, we didn't allow, we always fought for the customer. And that was part of why I opened up Mr. Top Step, is that to share some of these experiences and bring in good guys like Manny and Tom and David and we've got a great ensemble, don't we, Manny?
For sure. And for the folks watching who may not be aware,
Lauren
for the folks watching that may not be aware, Danny was one of the original. So I can remember watching Danny. Danny used to do a mid-date update from the floor of the CME. And it used to be
the floor of the CME group. This is Danny Riley from Mr. Yeah.
Yeah. Put it on about lunchtime, right? And this became like a what did Mr. Top Step think? Where's this going for the rest of the day? This is, guys, this is dating back to 2010, maybe, right? It could have been earlier, right?
We opened it in 2009.
Yep, and that's how I came to know Danny and been trading. I've been in the Mr. Top Step orbit since about 2012. Just a great group of guys, consistently profitable traders. And I just want to let you guys know that he was probably one of the originators on YouTube, putting out market content, letting everybody know what he thought, where the day would end.
He's a celebrity.
Well, that was also part of the MIM. we used to get the imbalances out from the banks and, you know, put them out. And, you know, those were great days. And I have no regrets. You know, I think in life that there's always going to be a point in time where you wish you could go back and say, hey, I did it differently. But, you know, very much like my dad, he always worked hard. He was very honest about what he did. And again, I can't pretend that, you know, I mean, the particular order that I filled for Marty, you know, they just kept quoting a bid, and I said, sell it, you know, and quoted a bid and sell it. And Marty yells at me. He's like, you fucked this thing up, you know? And I said, no, I didn't. I said, I want to get the broker in the pit. He's like, you go get him and I'll pay the fine. So I went up to the side of the pit and I did a little Irish jig. And all of a sudden the broker comes jumping out of the pit. I'm not proud of this, but it's a true story. His name was Wally Posner. I go bouncing off my desk and I gave a left right to Wally, and he went down on the floor. It was a complete melee. And then my former partner, Brian, Marty calls up because all these phones on the floor that Marty was using. Said, did you see this thing that's going on with Danny? And he picks up the phone at the desk. He's like, what's going on? To my partner, he goes, well, he's getting hauled off the floor right now. He's like, yeah, well, I got my own problems. I got my own kids. I got my own problems. And 10 days off, a week off, and $10,000 fine. That's what I got for going to bat for him.
That's hilarious.
Yeah.
Hey guys, so real quick, let me just give the folks watching a quick update. So in terms of what Powell was talking about, he said policy remains at 3.5% in March and or at 3.2%. Wait, long-term inflation expectations are consistent with 2%. Economic outlook highly uncertain. Maybe that's why we're rallying right now. Yeah. Energy prices will push near-term inflation. Policy not on a preset course. And then he also talks about this is going to be his last press conference as chair. So nothing yet. Let's see. The book is pretty thin right now with just, double digits, of liquidity on each side. So it's still going to fly around pretty good. Still not safe. Let's just wait till this settles down a little bit before we initiate anything.
And then there's another headline out there right now. Again, I've been trying to avoid this headline shit. Trump saying there will never be a deal with Iran unless they agree to no nuclear weapons. Yeah.
Wow. Yeah. He's been consistent about that. So
it's not going to be a win for him. If he comes out with anything less than that, it's going to be a loss. Right?
Yeah. I think that he's got to come to terms with that stuff kind of soon, right? It looks like, they're, I don't know, they seem to be dropping a few mines in the strait, and that screws everybody up. And, if we could have stopped those mines by now, we would have taken that away from them. But what do I know? I'm just an ES trader.
A lowly trader.
Yep.
Well,
I'm just a trader that knows how to stay out of this tape right now because it is wickedly thin in the book.
Yeah, this one headline says Powell, Fed Chairman Powell, inflation remains elevated, reflecting the rise in energy prices. This is all pretty much stuff we knew.
Yeah. So you know what? David was right? It looks like he's not willing to rock the boat. It looks like, he's thinking about the next guy coming in and passing the baton, which kind of makes sense.
He's measured. I mean, he's, here's something, I was playing around the other day. Okay, since the war started, right, there really wasn't a lot of notice that they were going to be at war. Lockheed Martin, since the war, is down 15%. Raytheon down 15%. L2 Harris down 12%. Northrop Grumman down 20%. All these defensive stocks have gotten crushed.
Yeah, and so that's odd, right? Because you
Yeah, it
typically might see them rally on this, but
Yeah.
I
For-
I don't think that markets are going to sell off on any war type event. I think that I don't know. Looking at some of the stuff I was looking at, it just kind of seems like it's always after a war, and that markets sell off basically after positions unwind and there's some type of economic headwind, right? And so that's what I'm looking out for in this statement. If he says things like energy prices will push up near-term inflation, all right, so define near term and when does that end? He has no idea, right? So that's something we need to keep an eye on. Economic markers, housing sector remained weak. Business fixed investment expanding at pace. Consumer spending has been resilient. Yeah, that's news to me, because everybody I know is kind of being more frugal about things nowadays.
Yeah, there's still more Powell headlines. I mean, we know that there's inflation out there. You see it at the gas pump. You see it at the grocery store.
Yeah, I mean, there was I saw a social media post on from California where it was like just under $6 for a gallon of gas.
How much is it in Florida? How much you guys paying?
Well, Florida gas got down under $4 last week, and then I think it jumped like 14 cents yesterday or the day before.
Really?
And you've got a Tesla. You don't have to worry about that.
Yeah, I can. I don't remember what gas cost.
We're paying.
I think I explained this when Jeff Hirsch was in town for a couple of days. I drove him to the airport. Gina and I had lunch with he and his wife, and the gas near the airport, I had to put some gas in the car. Premium was $5.75.
Wow.
So that's got to be putting the hurt on a lot of people, even if it's just above $4.
Yeah. I mean that's gonna pinch. You also have I read a news story in the Wall Street Journal about how credit card fees are higher, and I that's going to be tough for folks. I mean, I tend to try to stay away from debt, and but when you add higher costs for basic stuff like eggs, gas, and interest rates, I mean, eventually that's going to hit mainstream. That's going to hit the economy pretty good. But you know what? The stock market is not the economy. We all know that. And trading is a completely different horse. So let's be mindful of, let's just focus on our levels and trade what we see in front of us. Not get too wrapped up, although we do have to stay aware of that, aware of the economic climate.
Well, even
hey guys, give me 2 seconds. I just want to run to the bathroom real quick. I'll be right back.
Even the staples haven't done that well. There's been a couple of them, but they're all down. Colgate Palmolive, Clorox, even Costco's been flat. Estee Lauder, I understand why it's a.
Well, at the same token, though, Tom, the S&P is only down 25 points.
Yeah, I mean, we're up since the war, right? Up 3% or so?
Yeah.
Roughly?
Yeah.
Yeah, it's
so, I don't know. Been a rough trade. I'm always a bull guy, so when they go down like this, I don't do real well.
You're generally bullish?
Yeah.
Yeah, I fall into that category myself.
But I think this also goes back to not trading on Fed days. I mean, Handle Stats is adamant about it. But I did just look at Intel got up to $94.
Yes.
Is that right?
Yeah, well, I think the
94.10.
Yeah, 94.10.
Wow.
Good for him. I hope, like I said, I hope.
Yeah. I mean, you always want to see your friends. Yeah, I mean, I always want to see everybody do well.
Yeah, it's.
But he definitely he definitely had this one nailed down, and he took a lot of he took a lot of heat from his wife throughout the period of time, and you know, it would go up to 30, 35, and then it would break back down to 20. And why did you buy more? And, you know, he was adamant. I mean, he just was adamant about Intel, you know, and then some of that more better news came out about Intel. He just added and added and added. I think he had 10,000 shares. I don't know what he's got now. I know he's been peeling them off on the way up. I mean,
which is smart, but good for him.
Yeah. Well, I mean, it's nice to see, you know. I mean,
absolutely. Who doesn't like a success story?
Well, he was very good about being in the room and the rooms and telling people to buy it, you know. He was even telling me when it was at 40, it's not too late to buy.
Mm-hmm.
I was like, well, I didn't buy it at 20 or 25. Why would I buy it at 40? Now it's, you know.
Definitely don't buy it now. At what, 75?
Got up to 94 today.
Well, it was like almost every day it was someone's throwing 50 billion. You know, they were throwing huge chunks of money. The government was buying into them, right? With the Biden administration, Nvidia came in. There was another. It was like everybody's throwing billions in it, and the stock wasn't moving.
Yeah.
Yeah, you know, and so what's interesting about that, and I'm going to talk to Handel soon about this, but I wonder what's his plan to take profits, right? That's always a tricky part of the equation, right? Where do you take it off? Because I know once you get a position that's working well, right, you definitely want to stick with it. And knowing that we're probably not going to catch the top or the bottom, right? But you definitely need a process for peeling some off, and that's a lot harder than what most folks would admit.
Yeah, gold is kind of drifting. You're going to start testing its lows. I don't think it's going to do much, but
hey, look out! Rates popped. Whoa, 10-year.
Yeah, I mentioned it a little earlier that little by little.
Yeah, it's going to be hard here for the indexes to rally.
Yeah,
and you know what? The Russell's been really weak all day long.
That I was going to mention that because we were talking about that on Monday, how stable it's been, and that's the only one that has fallen the most. Nasdaq's a positive.
Wow, sure is.
Yeah, 2 years going to test
mixed bag.
4%.
Spike in the VIX here. We're now up 6%, up to trading 1891. And crude is at 107.23. Geez, Rev was right. Was right. If you guys listening on stream this week, Revery's been calling for higher crude prices. I know he's long. He's doing well at it. Good job, Rev.
Yeah, no, that's absolutely. I complimented him this morning or this afternoon. He called it on Monday. He told us.
Yep, for sure.
He was referring to the crack spread and saying it's pushing to the higher. Yeah, we're looking at. It looks like the 2 year or 2 years trying to get to 4%.
Wow. Well, nothing like a little volatility. We've had a couple of quiet days in here. I mean, the S&P only did 1 million contracts on Monday, 1.03 million. And then yesterday did 1.3 million, and we're on our way to, what are we on our way to?
This will be a normal transition to Wash. Expect a normal standard transition of chairman.
I gotta look at the volume real quick. We're just under 1 million right now. We're still not very much. We're only 964,000, and the big board volume's been surprisingly low too.
It's just indecision. I don't think people really know. They don't want to commit that much money.
Yeah. And Tom, what have you been buying? Any ETFs you've been jumping on?
I've been playing around with stocks. I've been short. Was it actually, in fact, going into it, Chipotle. It's been just kind of hanging in there.
You've been shorting?
I was long. I got out a little early on XLK just before it broke out. I didn't think we were going to have that kind of a rally. But I've been playing more. It's just been a tough market because there's not a lot of things breaking one way or another.
Yeah.
What was the other ones that we were doing? Oh, Dollar General. I've been short Dollar. Jesus, forgot about Dollar General. I've been short Dollar General about 147. So that turned out to be a really nice trade.
Now
Covered that yesterday.
you're collecting premium, Tom? What are you?
No, I just went straight directional, and I just went out to the maze, and yeah, that turned out to be a really nice,
That's nice.
really nice trade. So because I cut that one out last week on the 13th.
Do you always have a position on, Tom, or sometimes you just?
No, sometimes no. I'll sit on the sidelines.
Yeah.
Like right now, I'm probably 80% cash, 85% cash. Just kind of waiting one way or another because the markets, as Manny and I have been talking about and Monday mornings, is that it's hard. It's hard to find a real strong direction one way or another. I like going with the trend. I don't like going with counter trend rallies or counter trend moves. I don't like it. I've probably played more spreads over the last 3 months, 4 months than I ever have. This is because there's not a lot of movement.
Yeah.
Tom, as a swing trader, how do you define, your time frame in a market like this? Like, are you a 4-hour chart guy? Are you looking at daily?
No, I'm looking. I do usually 2 charts, 30-minute, and because it's profile, but daily. So those are the primary things. I'll look at the daily, primarily for context. I will go to weekly. Because I just want to see what's going on. I want to see what the big picture is prior to, I hate to short into something that's going to be a lot of support on a longer time frame. But that's why I primarily use daily charts and 30-minute charts. 30 minutes for entries.
And so, and again, what's like an average hold time for you? Like, is it days, weeks?
No, I checked it the other day. 18 days. Okay. I'm usually somewhere. Let's say roughly 15 on average. It's when things are going well, it obviously I lengthen that, and when things are choppy, but I'm somewhere around 15 days normally.
Okay, yeah, that makes sense. Yeah, that's always the key question. And I wonder how, given what we saw between like February and March, were you sidelined for much of that? Because we were just chopping around at highs for quite a bit.
I was, the beginning of this year, I hardly traded. There really wasn't a lot of conviction. There wasn't a lot of things going on. And again, man, you're just referring to when we talk on Monday mornings, and it's just been very quiet. There's just really no direction. And it just really comes to, there's not a lot of, they're looking for more information. They're indecisive right now.
Right. Yep. Yeah, that's important. That's important to know for a swing trader, when to adjust your strategy from when the market shifts from trending to just range bound, because I mean, you could just be sitting in something and you want to be cautious. Do you I'm sure you use the indexes to kind of key in off that, right? Because that's we talk about that often on Mondays.
Yeah, I trade a lot of the S&Ps or SPYs, and I do probably the majority of it in the equities, individual equities.
What would you? So let me ask you this: what do you think is the most common mistake you see with swing traders making?
One of the, I don't know if it answers your question, but I see a lot of talking to people when trying to help them, because I do mentorship with traders also, is using indicators. And a lot of them use that for their action, and it's like, that's not going to help you. That's just really not a good, and MAC, but most of it is with individual traders. And I think, this falls along the line of what Danny and Laura were talking about, is the biggest problem with traders is not the buys and sells, it's themselves. It's trading, and we all do it. We've all gone through it. We're not trading against the market, we're trading against ourselves.
100%. Couldn't agree with that more.
You're long, you make a few ticks here and there, you get out, and then the thing rips. And and we've all been in that, where it seems everything we're doing is wrong, and you end up beating yourself up, and it's tough to get that back. It's tough to get that momentum back. But once you get over that hurdle, and it's kind of one of those things, is when you're mentoring, you're trying to accelerate the learning. And that's all we're trying to do but that's the point, is it's almost, kind of pledging for a fraternity. You have to go through that.
Good way of looking at it.
and it's tough, and it's the process. And, as we talked about before, it's the process you going through. And I mentioned it, and I'm going to mention it again, is, if the market goes this way, how you do it every morning. If the market's ripping, do this. If it's sideways, do this. If it's going down, have your scenarios. Try not to think this is, kind of, when I play craps, I try not to think when I'm doing that. I've got my strategy, I know my system, and I do my thinking before I get there. And when I used to play craps, and it's the same thing. I try not to think when I'm trading, and which is usually, every one of my teachers said it's not going to be hard, is I do my homework. I need to do roughly 35 minutes of homework for every hour the market's open. I'm up here an hour and a half, and I'm usually doing 2 hours afterwards. So, it's fun. I enjoy the process. And that's the thing, is once you get your process down, trade what you know, it just becomes a little easier. And to answer your question, the biggest thing, and it just kind of came to mind, is young traders trying to do too much.
If sitting on your hands is probably one of the hardest things to do.
It really is. And they're trying to trade futures, they're trying to trade equity, trying to do swing trading, trying to do intraday trading. No, don't. It's kind of build on one thing. Do that one thing, and then build off of that, and then build off of that. Make it, the slower it saves you a lot of money. It just saves you so much money.
Yeah, and so I'm big on mindset, right? Like you like I can't trade well unless my head's in the right space, and that's often how you can unwind a good week in a few hours, and not feeling well, and knowing that, hey, you know what, nothing I do right now would make anything better. Right, because sometimes that's the case. Like sometimes you just you take a shitty loss, you didn't follow your rules, and you're sitting around with that feeling, and then you think, oh well, let me take another trade. Maybe that'll feel better, but that's devoid of process, and then that's a haphazard trade, and now you're sitting on 2 losses and so forth, and it's just like if I take a loss, the best thing for me is typically just to stand down, walk away, get some breathing room. I wish I was better at that. Something I need to work at.
It's tough, but yeah, exactly.
Me too.
You want to, you kind of want to get that part of it. I want to get out of here even. If I get out today even, I feel great.
Yeah. And then you get back to even. You're like, well, wait a minute.
Wait a minute.
Hold on. I'm hot.
and then, damn it, I should have left when I was even.
Yep.
Do that one a lot.
Look
Do
at
that.
this, man. We went down, traded down 71.37. 164 contracts came off at the bid, kind of pounded lower, and those guys got clapped. Whew, what a ripper.
Yeah, this is.
I didn't participate in any of this. I'm just sitting here watching. But it's hard to think that we're going to sell off, ahead of all these earnings tonight.
Yeah, but I think a lot of people are watching that.
Target filled.
So, all right, gentlemen.
Yeah.
Gonna cut it. Thank you very much for inviting me. I hope we brought some value.
Always fun, Tom. Thanks for joining us. Thanks for helping us out
Have a
today.
nice evening.
Yeah, and
Yep.
I got Marty Marty's called me like 4 times. I'm going to jump off. Thanks a lot, Manny. You've been doing a great job. And, the more that I think we build this channel out, the better off we're going to be. I think we got to get some other guys in here. And, Danny and Lauren did great today. Did you get a chance to watch them?
I wasn't able to. I was kind of moving around. I had an appointment at a conference call, so I couldn't catch them. But I'll watch it later on.
Yeah. All right. Well, thanks a
All
lot.
right, thanks for popping in, Danny. Appreciate you. All right, for the folks watching, again, remember we'll be back again tomorrow for the market prep from 9 a.m. as we do every day. Keep in mind that this is going to be a volatile afternoon. So remember, react, don't predict, use your levels, use your patience, and execute by reacting, not predicting. All right, guys, take care. Have a good one. Thanks for tuning in.